Welcome to BigONE Weekly News Update. I'm Gavin. Global markets opened February under heavy pressure as a series of macro shocks hit risk sentiment. Cryptocurrencies, equities, and commodities all saw sharp volatility, while liquidity signals turned increasingly mixed. What initially looked like a policy-driven sell-off quickly exposed deeper structural vulnerabilities, especially excessive leverage. Crypto markets sell off sharply. The crypto market experienced a broad decline. Bitcoin briefly fell towards $70,000 before closing around $77,000. Ethereum dropped roughly 18%, breaking below $2,300, while Solana slid about 14%, losing the $100 level. Market sentiment deteriorated rapidly as forced selling replaced dip buying. The drawdown coincided with rising geopolitical tensions, renewed concerns over a U.S. government shutdown, higher oil prices, and a sharp rebound in the U.S. dollar. Volatility spread across equities and precious metals, reinforcing a global risk-off move. Hawkish fears dominate market psychology. Markets focused on the January FOMC meeting, major tech earnings, and President Trump's nomination of Kevin Warsh as Federal Reserve Chair. The nomination revived fears of slower rate cuts and tighter liquidity. U.S. PPI surprised to the upside. Equities fell, the dollar posted its strongest daily gain since May, and precious metals plunged. Bitcoin fell below $80,000 over the weekend. Despite the turbulence, January performance across traditional markets was mixed, with U.S. and European equities finishing the month higher before reversing into February. Liquidity conditions turn unclear. While the Federal Reserve's balance sheet expansion has improved overall U.S. liquidity, a rapid rise in the Treasury General Account has offset much of that benefit by draining cash from markets. As a result, liquidity is now moving sideways, leaving risk assets highly sensitive to negative headlines. Warsh's impact likely overstated. Although Kevin Warsh is widely viewed as hawkish, his recent comments have been more balanced, emphasizing AI-driven productivity gains that could support rate cuts without reigniting inflation. While he favors shrinking the Fed's balance sheet, any major overhaul would be constrained by the need to maintain Treasury, repo, and banking system stability. As such, the market's reaction to his nomination appears excessive. Other recent shocks, including geopolitical flare-ups and a technical U.S. government shutdown, are also seen as short-term sentiment pressures with limited long-term economic impact. Leverage, not fundamentals, drove the crypto drawdown. The sharp crypto sell-off was primarily driven by excessive leverage and crowded positioning. During the weekend decline, several large long positions were liquidated, pushing Bitcoin down to the average cost level of its largest holder, Strategy, near $76,000. This marked the largest long liquidation event in nearly 3 months, with total liquidations exceeding $2.5 billion. Crypto derivatives open interest continued to fall as traders reduced exposure or rotated capital into perceived safer assets, such as gold and silver. ETF outflows reinforce weak demand. U.S. spot Bitcoin ETFs have now recorded 3 consecutive months of net outflows, the longest streak since their 2024 launch. BlackRock's IBIT saw its largest redemptions to date, highlighting continued weakness in institutional demand. While long-term supply pressures have eased, short-term selling and insufficient marginal demand remain Bitcoin's core challenge. Markets remain fragile following a broad deleveraging. Liquidity support is no longer one-directional, sentiment is weak, and confidence will take time to rebuild. Until clearer policy and demand signals emerge, consolidation and elevated volatility are likely to dominate the near-term outlook across risk assets. Join BigONE today and take advantage of the growing cryptocurrency market.